And David, you've been quoted as saying that financial markets need to prepare for this impending carbon correction.
Yeah.
Can you explain what you mean by that?
Well, today, largely, the price of carbon, which is the price that you would need to put on carbon to reflect the environmental impact is not factored in. Largely it's not factored in. There are some countries that have a carbon tax or carbon price or cap and trade. If you take an assumption of the lowest assumption that the price of carbon would be priced in for everyone at, say, $25, the lowest that people think it could possibly be, then you're looking at an overall impact to the financial industry in terms of valuations of public companies of well over $1 trillion. If you take a price of carbon that the IMF is predicting it could be, say, $80, you're looking at multiples of $1 trillion impact to the industry. And of course, the interesting thing is it won't be uniform. It'll be different by the sectors and the carbon emissions that they're creating. So you get not only an adjustment, but you get a rebalance and you get a shift. We call this effect a carbon correction. And what it means is that companies and funds and banks are going to revalue instruments based on the true forward-looking likely price of carbon, and that they would move that estimate so that they'd incorporate an overall revaluation of those assets. And the overall impact could be significant, but of course it won't be uniform. It'll be different from high carbon intensive and carbon equivalent emissions industries to low.